So her next keynote is called All About Collaboration, How Are Organizations Working Together on FinTech. Ladies and gents, please welcome to the stage from Burnmark, Devi Mohan. Thank you.
Hi, everyone. I can see half of my audience outside waiting in line still, but we'll get started. So I'm here to talk about collaboration, which I think the panel touched upon quite a little bit early on. And I'm going to give you numbers and data and figures, because that's what I do in my research company around collaboration and how it's working today. But before that, I want to start off with a thought. FinTech, and every time someone mentions FinTech, the image is that of retail banking making drastic changes and transformations and launching apps. But that's the B2C side of it, which is a small, small part of FinTech. So today I want to introduce you to the world of B2B FinTech, which is far more fascinating with much bigger numbers. And one of the things we need to realize is, as Steve Jobs himself has mentioned, the customers don't know what they need until you actually give it to them. In that the B2B customers today aren't asking for a lot of the FinTech, but wait till the scale is there, and they will be asking. So a lot of demands from corporate clients today are based on what they see on a day-to-day basis with Google and Uber already. So it's already happening. So let's talk about uneven innovation a little bit. In corporate banks, and like I said, I'm talking less about retail, more about corporate today. In corporate banks, it's quite clear that the profits are declining. The fees are declining as well, substantially. If you look at the figures, they're quite substantial. And 30% of all of the bank's revenue would be affected because of digitalization. Now, despite these figures, we have 43% of banks who have responded and said, we want to be digital, but we don't know where to start, or we don't have a proper strategy yet. 19% said that we believe we have a fairly good strategy, but we don't know if it's working yet. But no one that confident, unfortunately. And if you look at the compliance space, and this is a lovely picture from Moody's, because it gives you the complexity of compliance and regulations that these people are dealing with, along with that pressure on revenues and profits, as we see it as well. So what do we do in such a world? Let's take the case study of challenger banking. Because I'm from the UK, I always talk about challenger banking because we do it well. This is the picture of all of the challenger banks in the world. Huge number, hundreds of them. But most of them are in the UK. That's where it all started from. I hope you know what challenger banks are. These are digital banks, fully digital, with no branches, no phone call centers, and most of the transactions via apps or websites. So the UK launched this phenomenon way back in 2013, with the FCA, the regulatory body, taking an active hand at it. And now you see the rest of the world following. But then we talk about the uneven innovation again here. Most of the challenger banks have been focused on B2C products like savings accounts, current accounts, and less about B2B accounts in the last 5 years. However, that's changing now. You can see the increase in number of B2B bank accounts now. And also, if you look at the kind of product range they have, again, massive change in the last 5 years, starting from just current accounts all the way to mortgages and umbrella products within financial services. But then look at those numbers. It's uneven again. The largest number of challenger banks are in the UK, and the largest number of challenger banks still offer only lending or savings or current products. So the innovation, as we call it, unfortunately is still happening in small silos in the world, and small silos in terms of products, which is a very, very worrying development here. And I want to show you the numbers to say that innovation can happen outside of these, and it's already happening, but it's important to look beyond B2C and beyond lending and savings now, because the market is getting saturated. Now let's talk quickly about RegTech. I'll run through everything because I only have 10 minutes. Sorry about that. And we did a massive study on RegTech. We classified every single RegTech startup out there into one of these segments. And as you can imagine, the largest segment, the largest growth is for compliance management. These are the startups who help banks and investment firms manage their regulatory needs. One of the other big areas of growth was support in terms of tax, education, in terms of risk management, etc. Now, it has huge cost savings potential. These are some examples of companies already doing that in terms of having use cases to manage both the back end and also the front end with the help of KYC and identity, with using biometrics and AI to do better identity processes. Then we asked them the question, what segment do you think you play in? And what kind of banks do you work with, and how do you help them? So really pointed questions, and we were surprised at the honesty of some of the answers. And most of the majority, of course, they work on the compliance side. And they said, we have done an average of 5 to 10 client POCs. And I said, OK, so 5 to 10 client POCs, how many have you converted as proper clients, long-term clients? And they said, maybe 1. So even though they are doing really well, and they are actually making substantial difference in terms of cost structures, substantial difference in terms of profits, they're actually not really working closely with banks, unfortunately, for some reason. And that's one of the big reasons for that is the time frame it takes for them to actually collaborate with the banks directly. So we asked them, OK, you did POCs with 5 of them, but what happened? What was the problem in getting a deal? And this is what they said. Sometimes the POCs can take up to 18 months to happen. The decision-making process takes 12 months or more within banks. So for any bankers in the room, this is a lesson. By the time you sign the deal, they're probably out of the market. They're dead as a startup. But it's also a really, really fascinating field, mainly because the collaboration element we're talking about, RegTech is not just about banks and startups working together. It's about regulators working directly with startups through sandboxes, like we know what they are, with banks and banks working together. For example, ING and Commonwealth Bank in Australia working together to have a common framework for dealing with compliance. Regulators are talking to each other. They're mayors in Singapore and FCA in the UK, for example. And then there are regulators coming together with banks, like in the KYC service they're about to launch in Singapore with all of the banks in one group. And the tech underneath it is also a case of collaboration. So AI, we know, it's the hottest topic. Everybody talks about it. It was blockchain 2 years ago, but today it's AI, the hype word. And even here, you can see the amount of collaboration that's happening. The amount of capabilities we have in terms of voice technology, for example. ANZ uses a voice-based AI analysis which can differentiate between twins, the voice of twins. And the level of customer-facing AI in place through chatbots, through actual robots in some of the banks is amazing. And also the back-end capabilities in terms of data and analytics and visualization is quite impressive as well. And chatbots, of course, the most popular use case within AI. Sorry I have to rush through it, but please write to me at the end of it, and I'll share the slides with you. It's on SlideShare, LinkedIn, everything, so happy to share. Banks are also collaborating for blockchain. I mean, we all know the story of R3, even though it's not doing fantastically well at the moment. But it's a really good case study on how banks can collaborate with each other to have significant benefits. And one of the biggest areas, for example, is lending. And BBVA has done that very well in Spain in terms of using blockchain for corporate lending end-to-end, right from onboarding. And the other really great example is Westpac and ANZ coming together to do intelligent receivables management. So one of the most difficult things to do is match an incoming payment with an invoice. And they've used blockchain to do that. Open banking is another great story. I mean, Token, TrueLayer, I mean, these are some of the best players in the field. And they are collaborating, working closely with the banks to do payments, universal APIs, for example, or identity processes via APIs. But how do you monetize open banking at the end of the day? How do you figure out with identity KYC API, for example, or PI or APIs to connect with your PISPs, how do you monetize that? Are you going to ask for more money, or are you going to remove money from somewhere else and put it in here? That's the big question we have. Investment collaboration, the figures show you where the collaboration is happening. The numbers tell you it's lending and payments, but the actual volumes is actually towards RegTech and tax at the moment. And of course, the core is being transformed in the process of changing that. And it changes, the core changes so that the collaboration can happen in different ways now. So anybody selling core banking in the room, you're in trouble, because it's all about APIs now and all about partnering in terms of markets, in terms of banking products, in terms of channels like chatbots and experiences. And these are some examples of people who have done that. But I will end with one thought, in that you can spend as much money on digital as you want, but it's just a tool. You need to know how best to handle it. And you need to be able to understand the value that digital is going to bring to you before you actually spend millions and millions on it. With that thought, I will finish my presentation, but happy to talk to you anytime after. Thank you.